Hey everybody, it is Tom Sheehan of the Sheehan Real Estate Group of Compass here with your Greater Boston real estate market update. Going to talk about what we've been experiencing in the Greater Boston real estate market, what to expect for 2024, and then just some of my tips for both buyers and sellers as we get into the new year. Coming to you a little later than planned. I've had battling sickness for the last 2 weeks that had sapped my voice, but I'm sure many of you experiencing the same. That is winter in New England. And with a new setup, I hope to share some visuals with you to help these numbers make more sense and give you a better understanding of what's going on out there. So let's get right into it, right into pricing. So this chart is created by the Greater Boston Real Estate Board, and this covers the quarterly median sale price of a single family home in Boston, covering through 2023, going back to 2015. Just want to give you a good idea of how this median sale price usually acts over time. And as you can see, it's a little bumpy, and that is the seasonality that we experience in our real estate market. And if you've seen these videos before, you'll always hear me talking about year-over-year changes so that we can adjust for that seasonality. So looking at the end of 2023, the Q4 numbers were down from Q3, which is very typical. But the big change is that home prices were up 8% in Q4 of 2023 when compared to Q4 of 2022. The median sale price of a single family home in Greater Boston was up to $840,000 from $800,000, a 5% increase in 2023 when compared to 2022. And we saw a very similar story in the condo market. Again, this is quarterly median sale price in Greater Boston. This chart isn't as consistent as the single family market because we did have that COVID blip a couple years ago that affected condos quite a bit in their inventory. But as you can see, while we did have that usual lowering of the median sale price from Q3 to Q4 on a year-over-year basis, the condo median sale price in Greater Boston was up 10% to $625,000 when you compare Q4 of 2023 to Q4 of 2022. And for the year as a whole, the median sale price of a condo in Greater Boston was up $32,250, 6% to $707,250. And you might be asking yourself, Tom, I heard all this information about interest rates being crazy and the real estate market slowing down significantly. That doesn't jive with those prices. And that is very true because the reality is that does not tell the whole story. The big story is we have seen a dramatic decrease in the number of homes listed for sale. This chart shows the annual inventory of single family homes listed for sale each year going back to 2014. And while we've seen a pretty steady decrease over the years of that number, it has fallen off the cliff over the last 2 years. And here we see a similar drop off in the condo market. While we saw that blip up of an increase in inventory, which had to do with the type of development we've been seeing in Greater Boston, much of which is condos, as well as the COVID bump up when people were exiting their condos in the city to get out to the burbs. We've seen a also dramatic drop off in the level of new listing inventory for condos in the last 2 years. And when you hear people talking about, well, the real estate market is slowing, they're talking about the number of closed sales. When you have dramatically fewer things to sell, they're going to have fewer things sold. And while this chart shows we've had some pretty consistent level of sales going back to 2015, last year was a little below average, and then this year was just a dismal drop. Again, these are quarterly numbers going back to 2015 and the number of closed sales that we had in Greater Boston of single family homes. We saw about 25% fewer transactions this year compared to last, and even last year was a dip from the norms. And you see a similar drop off in the condo market. Again, there's that blip, that COVID blip. But now, even historically speaking, we've seen a pretty strong drop off in the number of condos that have transacted in Greater Boston. And as you've probably heard, mortgage rates have been the culprit. No one wants to give up their low mortgage interest rates. I've seen estimates that of the homes owned in the United States, more than 80% have a mortgage rate below 6%. Over the last 18 months, we've seen an unprecedented spike in mortgage interest rates, peaking at almost 8% in the fall. And that volatility and uncertainty has really just frozen up the real estate market and especially discouraged sellers. People don't like uncertainty, and when we get in circumstances where people don't really know where things are going to go and making a move is hard, they tend to just stay in place, and that is what we've seen in the real estate market. Now, if there's any good news that we've seen in mortgage interest rates, it's this drop off here that we saw from the peak in the fall, which has been pretty considerable, and it's where mortgage interest rates seem to have settled a bit right now. So right now we've seen interest rates kind of hovering in that 6.5 range, and hopefully continue to be stable in and about there. And given the volatility and the highest interest rates are a reason why sellers aren't selling, hopefully this dip in interest rates and stability will cause more people who've been wanting to sell but sitting on the sidelines to finally make that move. And since that interest rate move happened in the fourth quarter, I was hopeful and trying to be optimistic that hopefully the fourth quarter numbers of inventory in Greater Boston would show some relief, but unfortunately hasn't shown up just yet. This is isolating inventory for only the fourth quarter. So again, that year over year number. And as you can see, last year, 2 years ago, we saw a little bit lowering. 2 years ago, we saw a big drop off, and that drop off continued in the fourth quarter, which again was indicative of what we were going to expect in the following year. So right now, the dip in interest rates hasn't made its way to making sellers feel any better. And you can see, again, also in the condo market, we saw yet another dip in the last quarter of 2024 when compared to 2023. And so hard to be super optimistic about inventory, at least in the near future here in Greater Boston. And as a quick kind of illustration of how we found ourselves here, we really need our sellers who are on the sidelines to come off the sidelines and sell, because we're not getting new housing through development. This is a graph created by the Boston Globe that gives a good visual perspective of how our region ranks versus other major cities in terms of development. Since 2012, the Boston metro area has only permitted about 30 building permits for every 1,000 people. And when you consider we have a large wage of individuals in our population reaching the age where in their life where they typically want to buy a home, that's you millennials, it's hard to see where this relief on the housing crunch is going to happen. Both the mayor of Boston and the governor of Massachusetts have made headlines saying that increasing housing has been their top priority. And while that's great, realistically, we're not going to see the effects of those incentive for developments for many years to come. And even if we were to see this increase in the number of homes listed for sale, thanks to a decrease of interest rates, it's important to make note of one other thing. And that's that not only have the high interest rates kept sellers on the sidelines, there's certainly a good amount of buyers who've been on the sideline because of these high interest rates. If you look at this blue line, hopefully you can see my cursor, this is the number of mortgages that were applied for. So as you can see, when interest rates go high, there's very few people applying for a mortgage. Interest rates go down, applications go up. Now, some of those are refinances. Some of those, obviously, there people aren't applying for a mortgage if there's nothing to buy. But it does speak to that if we were to see lower interest rates, sure, it will bring in more sellers, but it will almost certainly bring in additional buyers to the market as well. So what do I think is going to be happening in 2024? Well, I expect we'll have a continued stabilization of mortgage interest rates. I read a lot of people in the mortgage industry. I talk to a lot of people in the mortgage industry. The consensus is that the economic indicators all suggest that we should see a stabilization of mortgage rates throughout this year and not have the same level of volatility that we experienced in 2023. Some of the most optimistic people feel that we could see interest rates in the 5s by the end of 2024. And while I think that would be great, I think it's a bit overly optimistic and would represent too dramatic of a shift down given all the other indicators that we have. And hopefully that stabilization of mortgage interest rates results in improvement of inventory. I've spoken to people in my sphere who would consider selling, who have decided this is the year they're going to do it after putting it off. I've talked to other agents who feel that they're going to have more listings this year than last. So hopefully we do see an increase in inventory to provide some relief to the market and this crazy upward pressure we have on pricing. But as I've noted throughout this video, we are far behind on levels of inventory that would result in a stabilization in home prices, let alone a dip in home pricing. So I still expect there to be a steady increase in the home pricing as we get through 2024. And lastly, a continued low number of transactions when we're looking at it relative to historical numbers. As you saw earlier, the chart showed a humongous drop off in the number of real estate transactions over the past 2 years. So while I do expect us to have some increase in transactions compared to last year, I still don't see us getting to a point where we were 5, 6, 7 years ago in terms of transactions just yet. So what does that mean if you're a buyer? Well, as always, be patient, but be ready. And what does that mean to be ready? That means having your mortgage pre-approval done so that if you do find a place that you really like, you're ready to act on it. And it also means getting out there, seeing property, visiting open houses, looking at listings online so you can get a better appreciation of what's important to you and what isn't, and what is reasonable for you to expect within your budget and what isn't. Secondly, don't try to time the market. If you were a buyer in the beginning of 2023 and you said, hey, interest rates are going up, that's going to mean downward pressure on pricing. Well, here we are a year later, and homes, both condos and single family homes, are tens of thousands of dollars more expensive this year than they were a year ago. And lastly, one way you can insulate yourself from a potential correction in the market is buying a place that will fit your needs for years to come. Lastly, buy a home that's going to fit your needs for longer than you expect. One of the biggest mistakes I see buyers make, hopefully not my buyers, because you hear me preach this all the time, is they buy a home that can fit their needs now, but isn't going to fit their needs in the near future. Selling a home is expensive, and even if your home has appreciated in price, it might not have appreciated enough in just a year or two to cover the cost of selling, and you might not even break even. So make sure whatever home you choose can fit your needs for many years to come. If you're a seller or potential seller, sooner is probably better. I'll say it again, I can't predict the market, but I do have pretty strong feelings based on most recent data. And for the coming months, it's hard to see a scenario where the market is not extremely seller friendly. I feel a lot more confident in what I expect to happen in the next 3 months than what I expect to be the case in 9 to 12 months. Secondly, understand the market for your home. Talk to an agent who's not only going to tell you the good things about your home, but where your home comes up short. Understanding the market for your home is going to allow you to position the pricing of your home for a great result. The biggest mistakes that a seller can make in this market is not properly pricing their home. And by mispricing your property, a seller is missing out on a huge opportunity to leverage this very, very seller-friendly market. And lastly, understand the options for where you're going next. I've talked to a lot of people who say, I would love to sell, but I don't want to find myself homeless. I don't want to have nowhere to go. I don't want to get stuck trying to buy. Well, understand that there are loan options, that there are timeline options, and there are contingency options for you as a home seller that will give you a lot more flexibility than you think you might have. And those are all options that a really experienced agent can go over with you and figure out what's the best fit for you. So speaking of that, as I say at the end of every video, every person's situation is unique to them, and what they should do could be different from someone else. So if you want to talk to someone and have a plan put in place that fits what your needs are, what your circumstances are, I'm happy to do that for you. Just give me an email. Where am I going? That way. All right. Shoot me an email, send me a text, or give me a call. I'm going to be happy to help you. Thanks for watching, and looking forward to talking to you again soon. Thanks.